Did Bitcoin just bottom? Bitcoin reclaimed $19,000 as new rally gained steam. Also on today's episode, Michael Saylor explained how Bitcoin could surge up to 80x and beyond.
And what better way for us to kick off this series than by having two esteemed titans of the crypto industry. Michael Saylor, the CEO of MicroStrategy, and our very own CZ, founder and CEO of Binance. Michael, CZ, welcome to you both. So Bitcoin. Everyone's talking about it. It's the hot topic of the year, if not every single conversation right now in Wall Street and Main Street. CZ, you've been known to encourage people to slap themselves for selling their Bitcoin. Very brave, may I say. And Michael, you're quite clearly practicing what you preach at MicroStrategy.
On top 5, we drop a new video every single day, so be sure to smash the subscribe and like button and leave a comment because I would like to hear your thoughts. Also, if you would like to diversify your income, I recommend you using this program. The link will be in the description below. So feel free to click on it and tell me what you like. The price of Bitcoin has started to rally again on December 13, rising above $19,200 after a drop to sub $17,600 on Friday. The significant increase in buyers' demand in the area indicate that BTC may have just seen a short-term bottom. When Bitcoin initially dropped to around $17,700, on-chain analysts including Edward and Nick pinpoint a large buy order on Bitfinex and Coinbase. As soon as the BTC price briefly dropped below $17,700, it started to rebound quickly, reclaiming $18,000 within 3 hours. Conventional technical analysis suggests that the logical Bitcoin bottom would likely be established at $17,000. It marked the top of a weekly candle in January 2018, and it also a major support area on a lower time frame chart. Morra noted that the Bitcoin may have appeared to recover randomly at $17,600 if traders were not observing exchange heat maps. There is an argument to be made that there is now less selling pressure in the near term since the miners and Wells sold off heavily last week. In other words, this was the much anticipated correction and the bullish U-turn has been confirmed. The probability of an all-time high increased further if Bitcoin surpassed $19,400 resistance. Next with low selling pressure. Next news.
There are just a few institutions allocating 1% of their treasury into Bitcoin, and that's causing this rally already. So just imagine like how much more demand there is once more of the treasury managers figure out that this is what they need to do. So from my perspective, I think this year, yeah, it has been pretty bad in almost every other instance, but it has been good for the crypto industry. That is really showing that the fundamentals of Bitcoin, fundamentals of cryptocurrencies, that it is limited supply, there's no inflation, it is a hedge against all these other macroeconomic changes.
Cool. So on that theme, Michael, of trying to 10 times this industry, let's think even bigger. Let's say 100 times this industry. What's your view on how we've got to get there? We were talking earlier around things like demonstrating to people how big the Bitcoin economy is. How do you quantify the Bitcoin community? Things like that, I think, are really important, and you've got some great ideas on that. So do you want to share with us how you think we can 10 times, 100 times elements of the Bitcoin economy?
Well, I think that it starts by rotating from one narrative, which is, well, Bitcoin is a very interesting uncorrelated digital asset with high volatility, with high potential returns, and you can put 1 to 2% of your portfolio into it with or without leverage. But that's one. That was a narrative, and the speculative narrative was predominant before March. But that's not going to appeal to 99% of the investors or the money in the world. They want something different. They want Bitcoin is the ultimate synthetic long-term treasury reserve asset. It's an engineered safe haven asset, engineered to be superior to gold in all aspects. A bearer instrument that's a store of value. And if I go from one to the other, then I'm not talking about getting 1% of the money from 1% of the investors. I'm talking about getting 50% of the money from 100% of the investors. Okay, so what does that mean? Well, I mean, it means that the people that we want to appeal to are the people that put their money in gold because they don't trust fiat instruments. So there's $10 trillion there. So they'll be looking at, how does Bitcoin compare to gold? How does Bitcoin's volatility compare to gold, returns compared to gold, trading liquidity compared to gold, etc.? How many people hold Bitcoin versus people that hold gold? I think the second big, by the way, and that's $10 trillion, right? So that gets you a factor of 20 to 50 there. The second bucket is people with bonds, $17 trillion of negative yielding debt, $100 trillion of 0 to 3% yielding debt. Why are you putting money in bonds, sovereign wealth? It's a safe haven. So people's reaction is the market gets scary, they run to a safe haven. I think it's pretty important in the crypto industry, and with regard to Bitcoin, you position Bitcoin as the ultimate long duration safe haven asset, so they run to it instead of running to sovereign debt. Mm-hmm. That gets you, again, another factor of 10, 20, 30. And then finally, you've got a pool of big tech investors. You could argue a lot of people are using big tech like Tesla, Apple, Amazon as a store of value. They've lost faith in the currency. They know they can't invest in negative yielding bonds. They're not quite sure about gold. I mean, gold is defective. It's an antiquated store of value. It was the best store of value for 5,000 years until we invented the computer, ZZ, right? Like, yep. It's like the Canon camera was the best way to take photos, and we put photos in shoeboxes in our attic until we invented the iPhone. It was a good idea until it became not a good idea. Libraries were a good idea until Google gave away 1 million books for a nickel for everybody on Earth. And then it became not so good an idea. And so what you've got here is people running to these things, like they're running to big tech, they're running to gold, and I mean, I don't know why anybody would run to bonds, by the way, like sovereign debt yielding negative. I can't figure that one out. But they're all looking for a store of value. Add up those three, it's $150 trillion. Mm-hmm. Bitcoin is 350. So the only reason people wouldn't buy into the idea of a crypto asset as a treasury reserve is because they don't understand it, or they're afraid, or when they show up to the exchanges, they get confused. So I think that when I show up to exchange, if you show me Bitcoin versus gold versus sovereign debt versus big tech, and Bitcoin volatility versus Apple volatility, by the way, everybody says Bitcoin's too volatile. Apple's been more volatile than Bitcoin for the last 90 days. If they saw Bitcoin versus Tesla volatility, Bitcoin volatility, Tesla's more volatile than Bitcoin. And so when they see this compared to big tech, to debt, and to gold, then you're telling them you can trade the one for the other. When they see Bitcoin compared to Tron, EOS, Chainlink, and 37 currency pairs, you're telling them they can trade Bitcoin versus Tron in CNY or BRL or ARS. But there aren't that many people with money in ARS and Tron that are going to convert it into Bitcoin. So and what you need to do is you need to frame the investment hypothesis for people, because anybody that sees gold, debt, or Tesla on the ticker is going to say, oh, well, this is a way I can buy this or I can buy that.
Right.
You're going to attract the money into the industry by looking outward to the alt assets and comparing Bitcoin to that. And then once they get into Bitcoin, you can then trade from Bitcoin into other cryptos if you're pursuing privacy, currency, stable coin, application, smart contract. All the other value propositions of the crypto industry will come through the gateway of Bitcoin. But Bitcoin is 0.1% of the ocean of investable assets. 99.9% are in the asset ocean, and we're talking about 0.1%. So we need to carve a channel between that ocean and that pond And we need to tell people it's safe to convert your gold to Bitcoin, your low yielding debt to Bitcoin, your big tech to Bitcoin. And this is a compelling idea. I think that's how we grow the industry.